Amazon will share more data with rivals and offer buyers a wider choice of products as part of a deal with the EU antitrust regulators that will close two of the most high-profile probes in Brussels. Details of the deal are being shared with Amazon's rivals to make sure that they will remove competition concerns before the European Commission, before that announcement can be made as part of the agreement. As part of the deal, Amazon will allow third-party sellers on its marketplace to have access to more information that can help them sell more products online. The deal comes 3 years after antitrust officials opened a probe into Amazon's alleged anti-competitive practices in how it handles data from competitors. Voyager Digital said on Wednesday it has filed for bankruptcy a week after the cryptocurrency lender suspended withdrawals, trading, and deposits to its platform as it sought additional time to explore strategic alternatives. In its Chapter 11 bankruptcy filing, the New Jersey-based company estimated that it had more than 100,000 creditors and somewhere between $1 billion to $10 billion in assets and liabilities worth just around the same value. For more on these headlines, cross over to Malta, where we're joined by Olumide Adesina, financial analyst with Quantum Economics. Olumide, good morning to you. Thank you so much for joining us. I want to, I guess, start with what you make of the resignations that we've seen so far in the Johnson government and how that affects them being able to navigate the economy going forward with all the recession concerns.
Yeah, we're not surprised, knowing fully well that after the non-competence vote, the Prime Minister survived. We've seen that it has badly damaged the government, and the public finance of the United Kingdom seems to be in tatters, despite being the second largest economy in Europe. Look at the British pound; it's trading at 52-week low. The foreign reserves is pretty much like an emerging market, just hovering slightly above $130 billion. And also the fact that the government seems not to reform the welfare and the health sector seems to also be adding more pressure. Then high inflation, energy costs also seems not to really matter. So we're not really surprised. But I think from the headlines, you will see that the government is trying to review the upward corporate tax from 19% to above 25. I think over 20. So, and what that means is that they're trying to make UK companies competitive. We're seeing energy companies bringing much bulk in the economy, and also the fact that the British pound seems to be weakening, meaning that exports for these companies will be more attractive.
Okay, great. In fact, you just preempted my next question. So the new finance minister, Nadhim Zahawi, who says he wants to review those tax plans. So I guess it sounds sensible considering where things are, cost of living crisis, energy costs so high for the average UK resident. Yeah, there's his quote right there. So it's a good idea, I guess, that he's looking to probably cut these, or rather reverse these tax increases before they even happen.
Yeah, Brutus, if you understand the operational cost across many of these companies with oil prices hovering above $100 a barrel, despite the fact it moderated by $12 yesterday, it tells you that cost is really hitting up margins of companies. And also, we are seeing layoffs across board. So I think it's really a smart move. But, critics say that it's more of a political sweetness because of the conservative approach of Boris Johnson. One of the reasons why the former chancellor resigned was the fact that Boris was against upward tax review of businesses. So I think this is coming at the right time, but it's left to be seen the impact it will have in the coming months.
What do you make of this deal that Amazon seems to have struck with the EU antitrust regulators to share data with rivals?
This is not surprising. Understand the IO lead in the European Union, you know what happened to Google and Microsoft. So I think it's a playbook of global tech giants being tamed by the European Union Commission. I think it's interesting to see that the e-commerce giant is willing to share data to competitors, but it's left to be seen how that will really dampen their upside, because you know fully well that Amazon has also integrated deeply into the cloud, and that has really become their cash flow. So I think pretty much Amazon has less to lose. They're really exposing their low margin businesses to what I would say intellectual realization. But on the long run, I think what we are seeing is the fact that business is no more the same for these tech giants.
Do you think this new speed limit technology that that has come into force today in the EU can successfully keep drivers below the speed limits, speed regulatory limits across the EU?
Sure, I think I share, but one thing about technology is that despite this disruptiveness, this is the early stage. But we look at the level of GPS, Google substitution, we have Google Maps substitution, right? And Starlink, the satellite internet service. I think these things are already coming in light. And the fact that we are having larger amount of chips in cars, like smartphones, these are things that will really help provide safety. One of the proponent of technology is to make things safer and efficient. So I think it's something that is interesting. But where the problem will start is the overriding capability when the interference will come to play and how effective that will be. Despite the fact we've seen autonomous technology in the likes of Google Car, we've seen the fact that they are not flawless as people imagine. We've seen accidents that can be sometimes fatal. So despite the interesting times, I think it's something that will scale with time. But it's something that we all look forward to, Lotus.
Real quick, Voyager going bankrupt. I think we've seen the crypto prices this morning. Just very quickly, where do you think this ends as far as the meltdown that we're seeing with all these crypto platforms, going bankrupt and so on?
Yeah, Lotus, the sad truth is that this was the beginning. Understanding the liquidity crunch in the market. The market has peaked at $2.97 trillion in November. Right now, it's moderating less than 100. So it has really brought out a lot of distressed assets and companies. And we're seeing companies that had questionable fundamentals or got over leverage being exposed. So we're not surprised. Celsius was one of the biggest names coming out. And we've seen BlockFi and others also posting similar problems. So I think it's just the start. And I think with the US Fed hampering to tame inflation, I think might see much money is coming out.
Interesting stuff. Olumide Adesina, financial analyst, quantum economics. Thank you so much for joining us. We appreciate your time.